For more on the story, let's talk to Peter Churchhouse now. He is Managing Director and also Head of Research at Morgan Stanley. He joins us live from our studios up in Hong Kong. Peter, good to have you with us. It's been a while. Is that what we are witnessing? People essentially taking profit on currency gains. Is that why money is starting to move out, portfolio investment starting to move out of Korea?
I think that's partly it, Martin, but there are also people are locking in quite big gains on the Korean market this year. The market's up 25, 27%, and I think a lot of people have held very overweight positions in that market as far as Asian portfolios are concerned. So I think there really has been not just a currency effect, but also taking some profit off the table on a market that's been very strong indeed.
Okay, could it also be taking money off the table, waiting for a time when they might be able to get in even cheaper?
I think that is the case. I think we're expecting to see the Korean market reasonably soft over the next month or two. But also I think there's perhaps a thought that perhaps some other markets which haven't done so well may well be better performers in the short to medium term. Markets such as Hong Kong and China, which have not done well this year. And so I think people perhaps are reallocating a little bit of money to some of these markets, having had such good gains in the first quarter in Korea.
Okay, Peter, why the softness? Why this kind of outlook for the next month? Are we talking just an expected, I guess, correction, or is it more the surging yuan that we've seen over the last couple of weeks or so?
I'm not sure that the Korean won against the US dollar is the big thing to look out for, just as your previous commentators mentioned. Funnily enough, the Korean won versus the yen has typically in the long term been a more important indicator to watch here. When the Japanese yen weakens against the Korean won precipitously, that spells a bit of structural problems for Korea because these two countries do compete very actively on the export front. The Korean won has actually strengthened a few percentage points against the yen in the last couple of months or so. That's more of an important indicator to watch in my view than the US dollar. And if that weakness of the yen against the won continues, then I expect to see more weakness in, particularly in the export stocks in Korea.
Okay, let me get to the crux of the matter then. Do you expect weak dollar, strong yen, the most recent trend that we've been seeing to continue, or are you looking at a reversion back to yen falling because the fundamental problems in Japan really have not been sorted out yet?
We're still expecting the dollar to weaken marginally against the yen in the very short term, but we don't expect that this is a structural problem for the dollar. People still do favor holding US assets in the long term, in our view, and the world is generating huge liquidity, and the dollar asset is probably still where people are favored to hold those assets in the long term. But short term, yes, we do expect the dollar to continue to weaken a little against the yen, but don't see that as a structural problem.
Okay. Peter, let me ask you, Morgan Stanley as a house, you're overweight Korea, I understand. You like the hardware sector, hardware tech sector, telcos, etc. What about financial services, though?
Yes, the financials are, in fact, one of our preferred areas right now. Certainly, we're seeing structural reforms in the banking system. The securities industry has done quite well, obviously, with pickup and turnover we've seen in the last couple of months. And we're still overweight that sector very much. And the tech sector, we really only have one overweight stock recommendation in that sector in Korea. But as you say, we're very positive on the telecom sector. We see Korea generally as being one of the cheapest markets in the region, 70 to 80% earnings growth this year, albeit from a low base, trading at 1.5 times book, 11 to 12 times earnings. That's a pretty good market average, and we think one should still be overweight in that market.
Okay, fair enough. Peter, one real quick last one before I let you go. I mean, one of the reasons that people are saying the won shouldn't be too much of a worry for South Korea right now is at the part of the cycle they're in right now. I mean, a lot of the growth, the recovery has been domestic demand led. It's not probably going to be until second half of the year when they're going to probably stretch it through to try and focus more on exports there. On the domestic front, this credit card bubble or a consumer lending bubble that a lot of people see building, does that worry you or not?
It certainly does, and we've been focused on that for the last couple of months or so. But it seems that the Korean consumer has been a major factor behind the economic recovery in Korea, and that's exactly what we'd like to see in other parts of Asia as well. the country's not relying just purely on exports for economic growth, but also seeing good domestic consumption. And I think that has been very much the case in Korea, but it has come at a cost, and that is this credit card boom, the housing boom that we've seen. That does pose some, we think, systemic problems a couple of years down the track in the financial sector. We don't think it's a problem just yet, but certainly it's something we should be watching out for over the course of the next 2 years.
Okay, good advice. Thanks so much. Peter Churchhouse, Managing Director, Head of Research also at Morgan Stanley from our studios up in Hong Kong. Good to talk to you, sir.